Good morning, everyone. How are you doing? I'm still playing with my camera over here for the live stream for Instagram, but how are you doing in the last week of August? I was about to say October, but it's not October. The last week of August. And that means fall is around the corner. Yep. Fall is around the corner and the end of the year is like at the end of the road. That's pretty much what this means. I had a friend that was visiting last week and I was like, oh my gosh, it's the last week of August. It's almost Christmas. And she's like, how is it almost Christmas? And I was like, in entrepreneur world, Christmas comes fast. So I hope you are doing amazing this morning. I'm going to go ahead and share this out to a couple of folks. Let's get the live stream started here on Instagram. And, I have a little story about taxes and I get this question a lot. And this is what we're going to talk about. How much do I save for taxes? 15%, 20%, 30%? We're actually going to figure out the right number for you. Yes, it all really depends on what you're doing inside of your business. So for those of you who are here, thank you so very much. Let me go ahead and share this out to our friends over at Budget School. I have to, if you see me like ducking and dodging, I'm trying to talk around my microphone, even though I know the realistic thing is to just move it out the way like I just did. But I like to do things the hard way sometimes. I like to do things the hard way. I hope you are doing well. I'm trying to get the share button to go. Hey, Nancy Styles, how you doing over on Instagram? Let me share this out to my folks. Today, we talk about taxes. All right. So for those of you, if I am showing up in your feed, you have no idea who I am. It is Monday. I am Phylecia Jones, budgetologist and solopreneur money management expert, and you are watching Ask the Budgetologist. Now, I come to you live every morning and I answer any questions you have about business, budgeting, and solo entrepreneurship. Now, you can find me here live over on facebook.com/Keep Up with Mrs. Jones. Or you can find me on Instagram at Keep Up with Mrs. Jones. And for those of you listening to the podcast, you probably already find me. Ask the Budgetologist is in all of your podcast players, or you can go to keepupwithmrsjones.com to get the latest show. Yay! All right. So people have already jumped in here. Oh my gosh. We got things going. Hey, Twyla. Hey, Heather. Heather is the calendar killer today. It's 120 days till Christmas and 110-ish shopping days before Christmas. Oh, Heather, we haven't even started holiday budgeting yet. Oh, I love holiday budgeting. You have no idea. Hey, Denise. Denise loves fall. We all do. Beatrice, good morning. Good morning. Good morning. Good morning. Hey, Cooper's Great Photography. That's Ann over on Instagram. And Sugar and Money. Good morning over on Instagram. All right. Today, we're talking about taxes. And I give you a ton of unsolicited financial advice. And it's unsolicited because I can do it that way. We're going to talk about taxes, but before we do, I want to give a shout out to some of my friends, Miss Twyla K and Miss Doris Birch, who have just signed up with podcast websites and are about to start launching their podcasts. So as soon as they get them up and going, they will be in the regular rotation. We will share it to the community. They are going to be fabulous, as Doris says. So excited for them. And for those of you during podcast week, oh my gosh, we talked about a lot about how you can use your podcast to kind of up level just a little bit when it comes to pitching for speaking gigs, and definitely a great way to pitch for brand new clients. Let them know who you are and let them know your personality. All you got to do is go over to keepupwithmrsjones.com/podcast websites, schedule a one-on-one session, see if it's the right move for you. They're going to help you get your podcast up and launch. And it's a team of English people. So you get lovely, lovely accents to help you out. You can feel fancy for about 15 minutes when you talk to them. Hey, Amy, how you doing over on Instagram? All right, let's go ahead and jump into this topic. Let's jump into this topic about taxes. All right, business owners, my solo business owners, my freelancers, my coaches, my consultants, we gotta talk about taxes, okay? And yes, Miss Rashida Leverett. I saw Rashad, sorry. Miss Rashida Leverett, yes, you are responsible for your own taxes. Now, we got to talk about taxes in two different ways, because the first way is where a lot of business owners get caught. And the second way is how other business owners get caught. Yeah, everybody gets caught. All right. Here's the first way most solo business owners talk about taxes. Everything's a write-off. Everything's a write-off. Oh, I get to go on this $5,000 trip because it's business. It's a write-off. That new computer is a write-off. That new phone is a write-off. All right, here's the deal, people. Write-offs are amazing. Write-offs are amazing at the end of the tax year when you need to pay your taxes. They're good right then. They're not good when you don't have a budget to buy the things that you can write off later. You see where I'm going with this? Write-offs are an amazing thing, but you shouldn't go blow your budget just because it's a potential write-off later on. That's why I always say budgeting, accounting, and bookkeeping are 3 different things. Please pay attention to me and listen to me well. Hey, Melissa, how you doing? Budgeting, accounting, and bookkeeping are 3 different things. And I really like to dumb it down just for my own edification. But accounting, this is the person that helps you make sure that you are tax efficient. That is tax efficient. You're not giving too much money to the government. You're not giving all of your money to the government, and you're giving enough money to the government to pay your taxes. That's what your accountant helps you do. So your budgeting numbers and your accounting numbers can look a little bit different because they make magic happen. All right, bookkeeping. Your bookkeepers, if you are your bookkeeper, this is just records of what you have done. It's records of what you have done. Your bookkeeper can also help you prepare. Amy says it's way too early for this. I'm so sorry. We got to talk taxes on a Monday morning. Now, your bookkeeper helps keep your financial records. They help you know exactly what you have done so you can make decisions for the future. They also help you prepare to give your numbers to the accountant so that they can do their job. Your budget, that's on you. Unless you have a CFO, which most of us don't. Unless you have a CFO, you got to manage the budget, and you got to manage who's doing the bookkeeping, and you have to manage who's doing the accounting. Your budget is for your everyday needs. It's what keeps your business ticking. That's why I come on here and I say, you got to know your numbers. You got to know how much your business costs. You need to know how much your salary you need to give yourself. You need to know how much you're putting away for taxes. Budgeting, bookkeeping, and accounting are 3 different things. Okay. So when you get all caught up in this whole world of everything's a write-off, remember that is affecting your budget right now. And I know this is very early talking about money. Oh my gosh. For those of you who are freaking out, if you need to have a one-on-one, all you got to do is go to keepupemrsjones.com/jumpstart, book a session with me, and then we can talk about this a little bit more. For those of you on Instagram, go and check the link in the bio. And for our Facebook people, go to that beautiful book now button over on facebook.com/keepupwithmrsjones. You can stop the pain and you can just call me. I get it. All right. All right. So we talked about the taxes. So a lot of us get caught up with everything's a write-off. Everything's a write-off. And that's amazing. But here's the other side of taxes. You got to put some aside for those of you who will be successful with your business. Now, it's very interesting. We can have write-offs and we can do losses for a few years. But at some point, your business is going to make money. You will actually bring in a profit and you will have to start paying taxes. And what happens with a lot of business owners, because everybody was in write-off mode and doing losses for a couple of years, people forget to put money away. The number of business owners that I have worked with that are paying taxes a year later because they didn't put money away. They got surprised at the end of the tax year. It's like, oh, I actually got to pay somebody money. Yeah, people got surprised. And then people get huge tax bills. I mean, we have quarterly taxes. We have annual taxes. It is just to make sure that you are paying enough. But still, people never put enough money away. We never put enough money away to pay taxes because you will start making money. And the government wants to be on your side, and they want to celebrate your success by taking a little bit for them. Yes. Yay, government. That is like hands down the best business model ever. Like when somebody else is successful, you just take a chunk without even providing any services. Oh gosh, I need to figure that out. Do I need to start my own country? I don't know. Now, if you have any questions, let me know. Put them down in the comment box when it comes to taxes so that we can have a talk about this. Hey, Melissa. Hey, Cassie. How are you doing? 180 Jenna over on Instagram. Thank you so very much. And Miss Searcha.co.uk over on Instagram. Good morning. All right. Now, I get this question a lot because I always recommend putting at the minimum 15% away into a bank account called taxes or savings, however you want to do it. We can piece through the words today. But I always recommend 15% to go into an account for taxes, just in case something happens, or you need to pay your quarterlies, or you need to pay your annual taxes. Okay. I always say 15%, but people always ask me like, okay, but I heard it was 30%. Some people are like, I heard it was 20%. And my question always comes back to the business owners where, how much are you saving right now? They say nothing. Okay. Nothing. Okay. Stop arguing with me if you're not putting nothing away. Put something away. Now you can put in 30%. It all depends on where your business is and where you are scaling on the money side. This is where it becomes very important for you to talk to your accountant. And let's just be straight up honest. A lot of us business owners, we only talk to our accountant come March 30th. Yeah, I'm calling some of you out. We only talk to our accountant then, and we only talk to our bookkeeper just in case we need to do something. So in order to fill in that gap of us not stepping into our CFO shoes and not talking to the people that we need to on a regular basis, I want you to start putting 15% away into an account called taxes. If you are in a country, I know some of you are in the UK and you watch me. I don't know UK taxes. I don't know other countries' taxes very well, but figure out what's the minimum amount that you need to just put away just in case tax time hits you, okay? Put away 15%. If you have a really good accountant, 15% should actually be pretty good. And when I say 15%, that is 15% of everything you make. Okay. If you get paid $100, take 15%, put it into an account. If you get paid $5, take 15%, put it into an account. If you get paid $1 million, take 15%, put it into an account so that you can be prepared. You can be prepared to pay your taxes when it comes. If you need to do 30%, this is where you're going to have to really sit down and talk to your accountant. I actually think for some of us brand new freelancers, coaches, and consultants, 30% may be excessive. But here's the thing. Worst best case scenario, you have a bank account filled with money. Woo! Nobody ever said anything was wrong with that. Okay. But this is where you're going to have to sit down and know your numbers. This is why I always say know your numbers so that you'll know exactly how much you need to be putting away. But if you're not really sure, I typically say about 20%, 15%, depending on if you want to argue with me. But 15% should be the base minimum of everything that goes into that account, okay? Then we can scale up to 20, 25%, 30%. And it really does depend on where your business is. If you are a brand newbie and you're not making any money in your business and you're pretty much like breaking even, all right, 20% may be just enough because you can tap into the write-offs, okay? But if you're making quite a bit of money on a regular basis, you are paying taxes and you got to be prepared for that. Now, I had a client a couple of years ago that made it was about $165,000 at the end of the year. Never in his life had he ever paid for taxes. This was like, whatever. That first quarter of the following year made about $100,000 in that first quarter. By the end of that first quarter, all of the money was gone. The money from the previous year, I don't know what happened with that. The money from the previous year, the money in that first quarter of the next year, all gone. Outside of overspending, outside of hiring people that he didn't need to hire, outside of just being frivolous with the money, it never occurred to him that he needed to pay taxes. So not only was he in the hole for paying for the past year's taxes, he also had to get on a schedule for paying the current year taxes. And if I remember right, he hadn't paid taxes the year before. So it was almost like a $30,000 tax bill and having to set the money aside for the upcoming year taxes. Because here's the thing. This is why your accountants and your bookkeepers are on you about quarterly taxes. They're on you about quarterly taxes because if you are making money, if you're making $100,000 every quarter, you better be ready because that tax bill is going to be nasty. And what a lot of us do, we just pretend like, oh, we just sit here in la la land and like, oh my gosh, I just made $130,000. And then here comes tax time. Like, what? I owe you how much? And I got a penalty on top of that. And that's what happened with that tax bill. Because they did not pay, and you get hit. Oh my gosh, the penalties are crazy. I actually had to manage the tax books of a company, and you get hit for penalties for not paying enough. You get hit for penalties for paying late, and then you gotta actually pay what you should have been paying. It is crazy if you've ever been in that situation. And what happens, and this is what happens with a lot of solo business owners. Hey, Savoy, how you doing? And what happens with a lot of business owners is because, all right, let's just say we ignore the 2017 taxes. Now we got to pay them in 2018 on top of prepaying for 2019 taxes. And we got to make enough money to pay off the IRS for last year's taxes, to put money away for this year's taxes. And oh, by the way, I still got to pay the bills in the business. It happens, people. I have seen this so many times. I know so many people that are making $300,000, $600,000 and still have no money in the bank because this tax thing was just like, what? So if you don't get anything from me today, I want you to take away two things. One, talk to your accountant, figure out what you need to do. Talk to your accountant, please. Just pick up the phone. And I know a lot of the business women, especially because I mainly talk to a lot of business women. A lot of the business women I know won't pick up the phone because they feel bad about not knowing the numbers, or they feel bad not knowing about taxes. Here's the thing. You don't need to know about taxes. All you need to know is that you have a team of people that you can call up. Even when you have questions, they will answer them. If your accountant is like trying to get you off the phone and saying, don't worry, get a new accountant. I'm sorry. You're paying somebody. You should be able to ask them questions whenever you want. And if they're not giving you the answers that you understand, you need to tell them, hey, I'm not an idiot here. I need you to break this down for me. Okay, bye, Amy. I need you to break this down for me and make me understand what's going on. This is where you have to be in your CFO shoes. You have to force the conversation around your money. This is your money. Because the thing, when the tax bill comes, the accountants, they don't have anything to do with that. It's up to you to come up with the money. You got to force the conversation. So if you're scared to talk to your accountant, stop being scared. Pick up the phone, power up those ovaries, grow some ovaries, and pick up the phone and talk to your accountant and your bookkeeper, okay? This is mainly an accountant thing, but you should talk to your bookkeeper as well, all right? That's the first thing I want you to at least take away. The second thing, if you don't even know what to do, I want you to take a base minimum of 15% of everything you make and put it in an account and call it taxes. 15%. Taxes is not emergency money. Taxes is not, okay, there's a ceiling just pop, a ceiling pop or a water pipe pop. I don't know. You know what I mean? It's just taxes. And it's going to sit there until tax time comes. And then if there's money left over, leave it there for next year. Okay. We got to get into this system of putting money aside and paying attention to what is going on with our numbers. This is what makes you a business owner. I'm sorry. All of the sales funnels, all of the cute websites, that don't make you a business owner. Knowing your numbers, being able to talk to the people on your team. Remember, your accountants and your bookkeepers are on your team, and be able to speak with some intelligence about what is going on with your numbers and your money. That's what makes you a business owner. So if you choose today to ignore the numbers, ignore the taxes, don't be surprised with what comes to you. Okay. Don't be surprised. All right. I got a couple of things in here. Please put your comments in the question box. No, put your comments in the box. I don't know what I'm saying this morning. For those of you who are listening to the podcast, all you got to do is reach out to me. There is a link on the show notes where if you got a question, all you got to do is click that and put your question in. So let's go see. Oh, Cassie is saying my new country should be called Budgetology Land. It should be Budgety Land. That would be fun. very financially efficient people, it actually may not be that fun because a lot of financially efficient people can be a bit boring. It could be funny. So Dia said many people don't realize until tax time, that self-employment taxes are added on top of any regular income taxes you may owe. Yes, D. Yes, girl, we're vibing. D, you and me, people don't know this. And I'll be straight up honest. I'm not an accountant. I had to learn a lot of this myself. I just knew that all I had to do was put money into an account. That's all I really knew how to do. Then you had to figure out all the intricate details of taxes. But it doesn't really matter if you don't have any money. That's the thing. It doesn't really matter if you don't have any money to take care of all this stuff, okay? Twyla is saying paying taxes is a great problem to have. You know what? Paying taxes is a great problem to have, but you'd be surprised, Twyla. I run into a lot of business owners that refuse to make a lot of money because they don't want to pay taxes. Let me repeat that. There are a lot of people refusing to make a lot of money, or they cap themselves at a ceiling so that they don't have to pay taxes. Yeah, that's a whole different show. Seriously? You're going to let something like paying taxes get in the way of you achieving financial success? I don't understand that one. I don't at all. And Heather is saying yes. Yes, Heather, yes. So here's what you need to do right now. Based on where you are in business, let's have a heart-to-heart with where you are in business. If you are a newbie, all you need to do right now is open up a bank account, call it taxes, and put 15 to 20% of everything you make into it. Please don't give me this story about, oh, it's too hard. I'm not making enough money to put away for taxes. It doesn't matter. Do it. Trust me, when you put this system into place, it will save you years later. There's so many businesses. We already know this, that the number of businesses that fail each year is because of financial management. And quite a few of them are because of taxes, not having enough money to pay. So for my newbies, 15 to 20% of everything you make, I don't care if you make $10, you better put 15 to 20% of that into a tax account and leave it there. Leave it. That's it. Just leave it. Just instantly. As soon as you get paid, boom, 20% over into this account. Or 15% into this account, okay? For those of you who've been in business for a few years and you're starting to make a little bit of money, this is the time for you to actually have monthly or bi-monthly conversations with your financial team. That's either your bookkeeper or an accountant, so that every time you are jiving, that you're all on the same page and jiving together, okay? So that you'll know exactly how much money you need to be putting away to prep for quarterly taxes, annual taxes, self-employment taxes on top of income taxes, all the other taxes that you need to pay, and then having conversations about reducing your tax bill. There are many, many ways that you can reduce your tax bills that a lot of us never, ever pay attention to. And this does come down to who is on your financial team. And I'm sorry to tell you, if you got a broke financial team, you will be broke as well. So you better be very clear who's on that team and who you are listening to when it comes to financial advice. All right. And the other thing you got to do, for those of you who are just getting into the point of starting to make money, please call your accountant. If you have been making $50,000 for 3 years straight, and then all of a sudden you have $100,000 a year, call your accountant sooner rather than later. They need to prep you for this. The last thing you want to do is call your accountant at the end of the year. Oh my gosh, I had a $200,000 year. They're like, what? Because they need to be able to prep you for the types of taxes that are coming. And sometimes you only have a small window of time to make other things happen to reduce your tax bill. Please have a conversation with them. All right. And so for those of you who are already in the game, you're making money on a regular basis, and you're having trouble. I got an email last 2 weeks ago, someone who's making almost about I think they're between $2 and $5 million a year. They still manage their own finances, and they're getting caught not being able to pay bills, not keeping up with everything, not getting things over to the accountant. For those of you who are finding yourself in this situation, and I actually had a coaching session with someone earlier this year, and she pulled out all the spreadsheets. She was like, I got the spreadsheet. I got this. I got this. She's like, I can't keep up with everything. I told her, I said, it might be time for you to hire a CFO. And she said, you know what? I just paid you to tell me what I knew I needed to do. For those of you that are making that much money and you're still trying to manage it yourself, keep your employees paid, keep yourself paid, keep the government off your back, make everybody happy, it might be time to bring in help. And I don't mean an accountant and I don't mean a bookkeeper. It might be time to have someone that you trust to come in and help you deal with all of this. Because the more money you make, the more problems you could have and the more problems you will have, okay? More money, more problems. Go listen to Jay-Z. 99 problems and taxes better not be one of them. There you go. But you got to pay attention to all of this. It might be time to step in, get a little bit of help if you cannot manage making that much money, paying that much taxes, and keeping everything afloat. That's when it's time to get help. Hey, Amanda, how you doing? Hey, Swaboo, how you doing? How you doing? All right. Twyla was saying, I've had clients who refuse to make money so they don't have pay. It's crazy. Yes, Twyla. I don't understand that. And I know Cassie's saying that's nuts. I know, Cassie. There are a lot of people who refuse to make money because they don't want to pay all the taxes. I don't understand. And the reason why I would say that some of these people are like this, because the concept of putting money away for taxes never has probably occurred to them. All right. So you got to start paying attention. Understand where you are. For my newbies, and I'm not saying newbies like brand new, but for some of us in business between 1 and 5 years, if you've never done this before, please put about 15 to 20% away of everything you make. I don't care if you made 25 cents, I want you to put 20% of that into that tax account. Okay. So I want you to start doing that. For those of you who are like just starting to make a little bit of money, please start having more regular conversations with your financial team. Make sure you have a team that you entrust, and please stop having broke people on your team. Sorry. Having broke people on your team will keep you broke. All right. And for those of you who are making a lot of money, it might be time for you to just get some help. Outsourcing to a CFO, bringing in an in-house CFO keeps everything right in your face to make it a little easier for you to manage. And Amanda saying, my husband makes a lovely amount and we get taxed together, so mine is 35%. Now, Amanda, it depends on how you are being taxed. If you are still being taxed as income, as personal income, or if you have gotten into this whole thing of being like an LLC, Schedule C, all that kind of stuff. So it really does depend. When you still have a spouse and you're being taxed together, that can get funky as well. So please make sure you talk to your accountant about all the intricate details of that. All right. Rashida, should we pay the 15% quarterly on the IRS website or just hold it until the end of the year? Rashida, all right, this is where it gets very tricky. You're going to have to talk to your accountant. And it all depends on how much money you are making. I say keep the money in the bank account. You don't have to pay 15%. This is where you're really going to have to talk to your accountant. If you are brand new, you may not have to pay taxes, depending on if at the end of the year you are cutting even when it comes to tax time, or if you had like minimal amounts of profit. If you only have minimal amounts of profit, you may only have to pay minimal amounts of taxes. So it really depends. You're going to have to really talk to your accountant to figure out what you should be doing at quarterly tax time. For a lot of brand new business owners, you may not have to do, I know accountants are going to hate me for this, but the reality is you may not have to do quarterly taxes at this exact moment, because you're still very, very, very brand new. Now, Rashida, if all of a sudden in your first year, you're about to hit like 100,000 to 200,000, yes. That's what I'm saying. If you are going from like making $100 one month to $15,000 the next month, please call your accountant and they will let you know what you need to do. For those of you, and you can pay the quarterly taxes, but you also, and this is where we get funky with the money, you're also giving the government a lot of money that they didn't need at that time, and you got to wait for it to get back. So this is where you got to talk to your accountant, and then you got to dig into how you want to manage your finances. But please take a look at that. Hey, Marie, how you doing? Hey, Rachel. So just talk to your accountant about that. And yes, you can go through all the steps to pay the quarterly taxes. But before you do anything, make sure you have a deep discussion with your accountant. And for those of you who are business owners, and you still, for whatever reason, you want to do your own taxes, that's fine. You can pay an accountant just for their consulting services. You don't have to pay them to do your taxes, but you can pay them for just consulting services, okay? Just get them on the phone for an hour, have them kind of do a quick look. They'll tell you what to do. You don't have to employ them to file taxes if you want to do your own taxes away. Amanda is saying she puts away 35% away, and if my tax account does its job right, then I have a vacation fund at the end of the year. Wahoo. All right. So what Amanda does is that she puts a lot of money into her tax account, and your accountant should do a good job. But Amanda, do you really want to give the government a bunch of free money? Whole different discussion. That's why you got to be very sure of how much money that you're putting away. And yes, if you're keeping the money just to yourself, yes, you're right. It can be vacation money, or it can be reinvestment into your business money. All right. So good for you, Amanda. I'm so excited that you do that. We do that here at our house. We put money away, and I also put money away for the business as well. All right. Rachel says, hey, Kat, how you doing? Rachel says, I plan to pay quarterly, which forces me to talk to my accountant quarterly. For instance, this year, I paid quarterlies for Q1, didn't have to pay Q2 based on his analysis of where I was at close to Q2. Yes, Rachel. Rachel is a very good CFO. Rachel's a very good CFO. But Rachel, I really want you to change your mindset because you're saying doing quarterly taxes forces you to talk to your accountant. I actually want you to stop using those words and say, I'm forced to talk to my accountant. I want you to take on the words of, I am the CFO. This is when I go and talk to my team to figure out what our plan is for the money that I'm making in my business. I don't want you to be on the side where I got to talk to my accountant. I don't want to talk to my accountant. No, I want you to step in to those beautiful 4-inch CFO shoes and say, this is what I'm going to do. I'm going to have this discussion with my accountant. You need to take the reins of your money, not just being like, I got to talk to the accountant. No, you're the CFO. Talking to your accountant is one of your jobs. Okay. It's a job. And nobody forces you to do your job as your business owner. Oh, Amanda's saying, of course, Amanda, I got what you were saying. Amanda puts her 35% into her savings account, not to the tax man. Yes, Amanda. Good job. Good job. Don't give it all to the tax man unless you have to. All right. So Rachel's good job on being a CFO, but I want you to get into the mindset of a CFO. Nobody has to force you to talk to your accountant. Nobody's forcing you to talk to your bookkeeper. The moment you decided to become a business owner, you decided to step in the shoes of a CFO. This is your job. Nobody's forcing you to do your job. This is what you do, okay? This is the job of the CFO when you step into your CFO shoes. I personally think you should talk to your accountants and your money team every month. That's me. On the 1st and 15th, we need to have regular conversations to know what's going on with everything. Because taxes move. And if you haven't been paying attention, tax codes change just like that. And you need to know what's going on so that the analysis stay the analysis, not 3 months later. Okay. All right. We've talked a lot about taxes, and I know Amy had to run. She said this was not for her this morning. No, I'm just kidding, Amy. I know you had to jump off. But seriously, my goal is for you is to make sure you understand these numbers. Okay. If you don't take anything, make sure you pick up the phone, talk to your accountant, because you are the CFO of your business. Base minimum, put at least 15 to 20% away every time you make some money. So that way tax time is not a surprise. It's not a, oh crap. And please stay on top of your numbers, because if you don't stay on top of your numbers, you're paying your accountants and bookkeepers double time to go back and look at what was happening in the past. That costs a lot of money. My client that made the $165,000, didn't pay taxes, that blew all the money in the first quarter and had to pay the previous year's taxes with the tax bill, prep for the next year's taxes. On top of that, because there were no bookkeeping records, guess what? $2,500 a month for 4 months just to look at the books for the past 3 years. That's what happened to a good chunk of that money. When you don't pay attention to your numbers right now, trust me, you will pay for it later. And bookkeepers and accountants, they love to help you. $2,500 a month just to go and look at the numbers from the last few years just to get the bookkeeping records in order. That's how much it costs. That's why all of the money was gone. I don't want you to get like that. I need you to start paying attention. I need you to start being the CFO, okay? You gotta, and if your accountant doesn't talk to you until April, it may be time for a new accountant. I'm sorry. This is your financial team now. As a business owner, this is your financial team. Seriously. If you only heard from your employee once a year and you still pay them, like, come on, y'all. Come on. All right. Twyla saying 1 year I paid quarterly and wound up overpaying. The state was near bankrupt and did give it back to me. They credited it to me the upcoming year. Never again will I pay ahead of time. All right, Rashida, make sure you're paying attention to that. This is why you got to talk to your accountant about how much to pay, because you are right. A lot of states will just credit the money to you. They won't give it back to you. So I hate that happened, Twyla, but that can suck if you overpay. That's why it's a very delicate little dance that you're doing when it comes to tax time. That's why you have to always talk to your accountant. All right. And Amanda saying business is a numbers game. Learn to love the numbers. You're so, girl, you have no idea. You just stole my heart this morning, Amanda. You just stole my heart. Let's just put it that way. And Rashida said, I got you, sis. I'm listening. Wow. Yeah, Rashida, make sure you just make sure you have a good financial team so that you don't give too much away. You give the right number away. And then, of course, at the end of the year, you can like fill in the gaps. OK, what quarterly taxes helps is so that you can put something in so that you don't get the penalty later. That's one of the big things. Because remember, when we had paychecks, remember how they do withholding? This is where we have to pre-do our withholding. That's like a simple way to answer it, but we have to take care of our own withholding. And taxes is an art. Yes, taxes is an art form. That's why I always tell you accounting, bookkeeping, and budgeting are 3 different things. They are not the same. Accounting, bookkeeping, and budgeting are 3 different things. All right, folks, I need to go jump off. We got to do some income producing activities today. And hey, Maria Jose Valencia. That's such a fun name to say. Oh, my gosh. Maria Jose Valencia. That's going to be in my head all day. I'm going to have to make a song out of it. Oh, wow. I'm so happy, Rashida. Send me the link. Learning so much. I'm so glad you're here because I get to say your name like all day today. That's so much fun for me now. All right. I need to go do some income producing activities. Hey, Savoy, you're the bomb.com. This is not a popular convo, but so needed. Learning lots. Thank you, Savoy, for being here. Now, I'm going to go sign off on Instagram. So y'all hold, please. For everyone on Instagram, thank you, Savoy. And Savoy, if I'm saying your name wrong, please let me know. Amy, search 180, Jenna, Sugar and Money, Nancy Styles, and thank you so very much for being here. I'm going to be here bright and early tomorrow morning. What are we talking about tomorrow for you, those of you on Instagram? We're going to talk about help. I cannot find speaking gigs. Ooh, I hear this a lot. So for those of you on Instagram, thank you so very much for joining in on a tax conversation. Have an amazing and beautiful day. Take care. Happy budgeting. Yay. All right. For those of you who are still here on Facebook, like I said, tomorrow I'm talking to my speakers in the group. For those of you, thank you, Maria. So for those of you who are speakers in the group, I'm going to answer the question, help, I cannot find speaking gigs. I get that all the time. So I'm going to give you an answer to that if you're finding yourself in that situation. So I hope you have an amazing day. Take care. Happy budgeting. If you need help with the tax stuff, all you got to do is go to keepupwithmrsjones.com/jumpstart. Let's get on the phone, have a one-on-one conversation, and we can figure out where you need to go. Where you need to go if you're still kind of like, I still have no idea what's happening. All right. I'm here to help you. Have an amazing day. Take care. Happy budgeting. See you tomorrow. Bye.